Good day, and here are the latest developments from the financial markets. U.S. stock futures and treasuries experienced a decline as traders adjusted their expectations for interest rate cuts, expressing concerns that the recent market rally may have been excessive. Futures linked to the Nasdaq, a tech-heavy index, saw a 1% loss, with Apple shares falling in U.S. pre-market trading following a downgrade by Barclays. Additionally, yields on 10-year U.S. bonds and German bunds increased by more than 5 basis points, reflecting a sentiment in money markets that expects fewer than 150 basis points of easing by the Federal Reserve in 2024. The first trading day of the new year marked a pause in the scorching rally witnessed in 2023, which saw a remarkable surge of over $8 trillion in the S&P 500. Tensions in the Middle East led to a surge in oil prices, while weak Chinese data also impacted market dynamics. Brent crude experienced a more than 2% surge after Iran dispatched a warship in response to the U.S. Navy's sinking of 3 Houthi boats over the weekend. The U.S. dollar gained 0.5%, with all emerging nation currencies, except the Brazilian real, trading lower against the greenback. The yen weakened against most of its group of 10 peers in thin trading following an earthquake in Japan on Monday. In Asia, sentiment was impacted after Chinese President Xi Jinping acknowledged the challenges faced by some companies and citizens in 2023, marking a rare admission of domestic headwinds. Adding pressure to China's markets, it was reported that ASML Holding NV, a semiconductor manufacturing equipment maker, canceled shipments of some machines to China at the request of U.S. President Joe Biden's administration. Despite the persistent weakness in China, some investors view the nearly 60% slump as a signal to buy Chinese stocks. In other news, Bitcoin has surged past the $45,000 mark for the first time in almost 2 years, driven by mounting anticipation surrounding the potential approval of an exchange-traded fund directly investing in the leading digital asset. The cryptocurrency experienced a notable 5.2% jump, reaching its highest level since April 2022 and settling at $45,443 as of 7 a.m. New York time. Other digital tokens followed suit, with Ether, the second-largest cryptocurrency, rising by as much as 4.1%. Bitcoin's recent ascent, approaching a 20% increase since the beginning of December, is linked to the looming January 10 deadline for the U.S. Securities and Exchange Commission to potentially greenlight a spot ETF for Bitcoin. The prospect of such approval has triggered a fear of missing out among traders in the U.S. and Europe, prompting increased buying activity from the early hours of New Year's Day. Cece Lou McCalman, founder of blockchain advisor Venn Link Partners, expressed confidence in Bitcoin's current bullish sentiment, suggesting that a major correction is unlikely, especially with the upcoming halving scheduled for April. The halving, occurring approximately every 4 years, involves reducing the quantity of Bitcoin miners receive per block reward by half. Historically, Bitcoin has achieved record highs following each of the last 3 halving events. Despite a turbulent 2022 crash, Bitcoin rebounded by nearly 160% in the past year, outperforming global stocks and gold. However, it still falls short of its pandemic-era record in 2021, when it reached almost $69,000. In tandem with Bitcoin's surge, shares of crypto-related companies experienced pre-market rallies in New York. Notable gains were seen in Bitcoin Proxy MicroStrategy, up about 7.8%, Miner Marathon Digital, up 11%, and crypto exchange Coinbase Global, up 4.1%. In other news, Elon Musk's investment in the platform formerly known as Twitter, referred to as X, has taken a significant hit. According to a report from Axios, the current value of X is now less than a third of the $44 billion price Musk paid for the platform in October 2022. Fidelity, the investment firm that played a role in Musk's acquisition, has further reduced the value of its holding in X by 11% as of the end of November. The decline in X's value is attributed to the turmoil that ensued after Musk's controversial remarks in November when he hurled vulgarities at advertisers who abandoned the platform over his endorsement of an anti-Semitic post. This upheaval has deterred advertisers, and the projected revenue from ad sales for 2023 is estimated to be $2.5 billion, a significant drop from the previous rate of approximately $1 billion per quarter. That's all the time we have for today. Stay tuned for more updates on the latest news tomorrow, and remember to hit the like and subscribe buttons.